what's going on in the markets because we've got a really, really big week this week. And when I say really, really big, I mean we've got the first Fed cut scheduled in the last several years, or a couple of years, several years actually. So let's jump right in and kind of go over where we're at and what's going to happen. So let's jump right in first off and kind of see where we're at. So people always ask, Waterstone Mortgage, who are you guys? Well, first off, this is a map of the wonderful United States of America. Hopefully, you guys can see that. These two states, New York and Hawaii, are the only ones that we do not service. Every state in the country I can do home loans in, except for New York and Hawaii. So if you have family, friends, whatever, that needs somebody that you could trust, I can do loans in every single state except for New York and Hawaii. So also want to make sure you guys know we're a mortgage banker, which means we do everything in-house. We're a mortgage broker, which means we can broker out. And we're a bank. Well, not technically a bank. Waterstone Bank is basically a brother of ours or sister of ours, basically, that we can use their products. We're one of the same, owned by the same company. So we are a mortgage banker, mortgage broker, and a bank. So we literally can do everything, and we can do it in almost every state except for New York and Hawaii. So I want to make sure you guys knew that. A lot of questions out there like, hey, can you do loans for my sister in Florida? Yes. But this is the big one, guys. What is going to be happening with the feds? Like, where are we going to be? Because this right here is the comparison of the Fed funds rate compared to the mortgage rates. Now, a lot of people are going to be asking, oh my gosh, I saw the Feds, lowered rates by a quarter or by half. They're still up in the air. I think we were going to get a quarter, but I think we may have pushed the likelihood of a 50 basis point cut a little bit further based on last week's economic outlook. But this shows you what the Fed funds rate cuts, how they impact mortgage cuts. So look back in 2009-8 when we started cutting the Fed funds rate. We cut it quick, all the way down. It dropped significantly, but notice the mortgage rates. They dropped a little bit, but then they went up. They went up. The mortgage rates went up when the Fed funds rate was being cut. So people are going to be confused if the rates on mortgages don't go down, or if the more rates on mortgages, if they actually go up a little bit, they're going to be confused because they're hearing on the radio Fed funds rate, or the Feds have just lowered rates. They're going to hear this. Cutting the Fed funds rate does not necessarily mean that the mortgage rates are going to do the exact same thing at the exact same time. As you look at this chart, you'll see they went down initially and then up, and then they went down, then up, then down, then up. They never move in a straight line, but overall, they did come down over time. This is what we're going to see with mortgage rates based on the Fed funds cutting their rates. So the Feds are going to cut the short-term rates, that which banks borrow money at the overnight window, 24-hour money, short term. That's what the Fed funds rate is. Very, very short-term rates. They're going to cut that. That's going to have a domino effect on the rest of the economics, including mortgage-backed securities that are long-term bonds. And you will start to see the mortgage rates come down eventually, but it's not going to be a straight line. We could see mortgage rates spike up a little bit. There's all kinds of things that could happen. There could be a cut of 50 basis points, and the markets could say, ooh, maybe that was too much. That could spur the economy to heat up, which could be inflationary. So you may see rates go up a little bit on the mortgages and then come down over time. So if you see the rates aren't cooperating exactly what the Fed funds rate are doing, this is why. They're not identical. They don't move the same, but they do kind of follow the same trend pattern, as you can see from this cut history breakdown on this graph. So you're going to hear it. You're going to see it. Fed funds rate cut by a quarter or 50 basis points. And then you're going to wonder what's happening with mortgages. And then you're going to scratch your head. This is a good representation of what's really going to happen. So I'm excited to finally see the Feds cutting rates, but we'll see what happens to mortgage rates as we go. So let's jump right into where we are with other exciting updates. So there are some announcements you may have seen. 2025, the conforming loan limit, this is Fannie Mae, Freddie Mac, is going to be up to 802,650. So basically, Fannie Mae and Freddie Mac are saying, this is the number. We're going to start buying these loans at the beginning of the year. So you can originate them now, but we're going to buy them in January. They will not buy them until January, but they will buy a closed loan that we're holding, so to speak. So the date at which you can originate these is going to be earlier than January, but this is what it's going to be, guys. So we went up about 38,000, 36,000, something like that. Not a bad jump, but a lot of people think this is going to be inflationary. All this does is follow inflation. So if the prices of homes gone up, the Fannie Mae and Freddie Mac say, okay, the values of homes have gone up, so we need to not be behind the curve. We need to match kind of what the housing prices are doing, which means prices have gone up. And a lot of people thought they would come down. Now, there are some areas that are seeing, you know, the micro economies of the different areas are seeing price reductions. But overall, across the United States, they are going up. Here's some interesting news reports I saw. So CoreLogic reported that prices have gone up. Another $25,000 in equity is what the average homeowner has gained this past year. So there you go. That's a good thing. And then rates, because they're coming down into the sixes, and the fives, we are now seeing that people can qualify for more. So dust off those old pre-approvals, because some people that couldn't qualify for what they wanted a year and a half ago, they can now qualify. Now, inflation. I want to go over this because people think and they hear inflation is going down. What does that mean? First off, the consumer price index last week came in at 2.5% for August, or average over the last year. So that's notably cooler. July is 2.9%, but it's still in the twos. So that means inflation is still going up, but at a lower rate in the twos, right? Inflation was at 9.1% per year, right? So we've come down. Now, what does that mean though? There you go. Believe it or not, inflation is coming down. That's what we're seeing. But what does that truly mean? That just means that the cost of goods is still rising, but not as fast of a pace. That doesn't mean things are getting cheaper. So right now, inflation, the cost of goods and services is still going up, but just at 2.5% per year instead of the 9.1. Now, we all think it's probably higher than that if you really look at the items we actually purchase on a day-to-day basis. And insurance, my goodness, let's not talk about that. But the Fed's goal is 2%. We're still going up. Prices are still going up, but at a much lower, slower pace. But they're still going up. We're not going to see, you know, everything going down in prices. Maybe some things are, but other things are going up. And overall, prices are still going up by just over 2%. The Fed's goal is 2, right at 2. So we're right kind of where they want to be. Now, we'll see what this first rate cut does to see how that has an impact on overall mortgage rates and inflation and everything else. But that's kind of where we are. So what's happening with the candlestick charts? What's happening with mortgage rates right now? This is where we're at. So if you see this chart, I mean, rates on the 30-year bonds the value has gone up, right? That's a very good thing. The yields are going up. And we're seeing now this little candlestick chart that's highlighted here. We went above this Fibonacci level. See that black line right there? That's a Fibonacci level. We tried to go above it here and we got kicked back. We tried to go above it here. We got kicked back. We got kicked back here. We tried to go above it here. We got kicked back. Right now, we're still just above it. Hopefully today we will close above this level. That means we have more room to get better, which means mortgage rates will get lower. And let's look at the 10-year to see what that's happening. Oh, the 10-year. Notice we went below it. It dropped. We went below it, and then it went above it, and then came back below this Fibonacci level. And then it went above it, and then came back below. It's below. The 10-year is below this Fibonacci level, which means the odds are likely that the 10-year will continue to drop. We're down 2 basis points today, but we have all that room to move down. That means when the 10-year goes down, mortgage rates go down. So we're in a good position to potentially see rates get better early this week. That's a good sign. So where are we on rates? Actually, this is, and I want to point this out, this is very important. This is the rates that are posted on Mortgage News Daily. Now, I've been asked numerous times to send out something like this. I could do that. I could absolutely do that. But the way I do business, I want to set proper expectations. So if you received this from me, here, guys, here's the average rates, and somebody with a 640 credit score sees 6.14, they're going to associate that rate with what I'm going to be able to offer them. And then when I give them a quote because they have a credit score that's lower than what this is based on, they're going to be upset with me and think my rates are high. So I want to show you this real fast. This is from their website, Mortgage News Daily. If you look at how their rates are derived, there's a whole list of all of the different things they put, but this is a top tier scenario. This is the best rates could be based on the average lender. Okay. This is not a middle of the road borrower with 20% down. This is with 25% down with a 780 or credit score or higher, a primary residence, a single family detached home, not a condo. There's a lot of things that come into these rates. So when people ask me to advertise this, I can, but it's only going to be relatable to a very small fraction of buyers. And it's going to set improper expectations for them. And it actually hurts the buyer's psyche more than helps them. I hope that helps you understand. So when people advertise online and they see it, yes, you can get these rates if you have a higher credit score, or I'm sorry, a lower credit score, but it's going to cost you money and it's going to cost you points. So it's very, very individualized, but I want to show you how this works. And here's an example. If you go to Google and do mortgage rates, there's a calculator. This is a calculator, 25% down, 780 credit score. That's average right now is just at the low sixes, 6.062. That's fantastic. So if I'm a first-time home buyer, I see this, I'm like, wow, finally, let's pull the trigger. If I see an advertised, but then if my credit score is a 730, look at the drastic difference. Everything being the same, I only have 20% down, not 25, and my credit score is at 730. I'm almost 7%. Now, see the danger of saying, yes, we can do this, and then they call me and they're here. It's improper expectation. So yes, we can advertise. I actually don't like the mortgage industry's side of advertising because they're only going to advertise the best of the best of the best of the best. In reality, very few people hit that. So here's a good spectrum of where rates are at. And again, we want to set proper expectations for our buyers and help them navigate reality instead of a fantasy land. And I think this is a good way of showing it. So what's going to be happening with this week? Retail sales are coming out tomorrow. Today, the New York Empire Manufacturing Index came out. It was a little bit hotter than expected. And then we have bond auction on Tuesday. But Wednesday, guys, the Fed's interest rate decision, the first time in a long time we've seen this. And we've got Mr. Powell speaking after that. So what the decision is going to be, a quarter versus 50 basis points, it's kind of a 50-50 right now. Maybe leaning towards 50 basis points. I kind of think it's going to be 25. If we get 50 basis points, I think we're going to see a lot bigger impact to mortgage rates for the better. So we'll see what happens there. And then on Thursday, we have jobless claims. And that's going to be really, really interesting to see. I think the Fed's going to peek at what the numbers are before they meet on Wednesday. So we could get a hint of what Thursday is going to be like based on what their approach looks like, and whether it's hawkish or dovish on Wednesday. So big news, though, the first time in a long time, the United States has cut their Fed funds rate. So exciting week for everyone. Let's really hope that we see mortgage rates drop. Again, they could go sideways, they could go up. It just depends on how the markets react to what he says and to how people are trading. So also, don't forget, guys, we have a guarantee on our pre-approvals, the platinum loan approval, fully approved through underwriting. We give a $5,000 guarantee to the listing side. So if you're a seller and you get a pre-approval from me, you've got a $5,000 guarantee that that buyer is going to perform. So didn't know if you guys knew that, but it's definitely something you should take advantage. But so that's where we're at right now as far as interest rates go and kind of where the markets are going. So big week this week. Do you have any questions on what's happening with the Fed funds rate, with current interest rates, with what to expect? Jump into the chat. I'm happy to help you any way I can. And where'd my Zoom call? There we go. Let me know if you have any questions, guys. The chat is open, or you can feel free to speak out. Don't be shy if you have any questions, guys. this rate cut have any effect on a HELOC? Yes, great question. Home equity lines of credit are based on the Fed funds rate. They're based on the prime rate. That prime rate will drop exactly the same amount as the Fed funds rate. So home equity lines of credit are a different type of a mortgage. They're based on the Fed funds rate. Mortgages like conventional Fannie, Freddie, Ginnie are a different type of a mortgage of a rate. Okay, they're based on long-term 30-year. The home equity lines, yes, they are based on the Fed funds rate, the prime rate. And yes, we are refinancing for free. Any customers of ours that have done a loan, they have no lender fees on the refis. So good question. Good question. Let's see here. If you have a credit score above 800, would your rate be? No, 780 is the best you can get. So if you have a 780 or higher on your credit score, you're going to get the best rate. There's no benefit to being higher than 780. Very good question. Oh, another thing on credit, when people look at their credit scores on their apps, totally different algorithm that's used from a mortgage credit rating. So they'll always come to me and say, yeah, Sean, I've got a 760 credit score. They're telling everyone that. They're looking at all the apps. They're looking at all the online. And then you run their credit and it's 720. And they're scratching their heads and they think, oh my gosh, when Sean ran our credit, he made our credit score go down. That's actually not true. First off, we do a soft credit pull, so it doesn't affect their credit at all. But a mortgage credit rating is actually 20 to 40% or 20 to 40 points lower than what you would see on one of those apps that you get from your bank or your online apps from whatever it may be. So I don't know if you guys knew that, but that's just an interesting tidbit. Is it that cold in Scottsdale? It is in my office. It's like 55 degrees in my office. So I have a space heater underneath. It's not that cold, but it is cold. Hey, I'm trying to bring fall weather to Arizona. I'm willing it to happen. I'm making it happen, guys. Any other questions? All right, well, I'll stay on just a little bit longer if you guys have any further questions. Otherwise, you can guys get on with your day. Let's be excited for what's happening on Wednesday. It's going to be really interesting to see how mortgage rates react. And I'm here if you guys need me. See you, Carla. You got it, Steve.
Don, if these people drop off, I got a couple questions for you.
Absolutely.
You're in town, right?
I am.
Yeah, the sweater's throwing people off.
I'm in town. I'm trying to will this weather into us, man. It was a hot weekend, but
I was in San Diego over the weekend. It was very nice there.
yeah, we my parents are in town, so we spent some time at the Desert Ridge Marriott with their lazy river, and
Yeah.
that was cool. That was it was hot. It was hot, but it was nice. I don't know if Carla and Tom are actually watching right now, but they probably left their computers. But
So I have a question about Katrina Palumbo.
yes,
I was kind of surprised. She looked better than I thought she was going to
yeah.
when we started talking to her. But did you come up with some more numbers for her?
Yes, and I can pull those up and get the more details back in a little bit.
Want to talk later today?
Yeah, I'll give you a call right after this. Let me pull up her loan
I want
file.
to touch base about her. I want to touch base on Jonathan Terry about the investment properties. I had some questions about that as well.
Yeah, did you find any multi-units that are kind of
You
in that
know,
range?
the units that I was initially looking at that were they had garages and there were 4 units. They were at 1.5. I think someone threw those on for like a weekend just to see what kind of response he would get.
Oh, interesting.
Yeah, there was 2 of them and they were there and they were gone. And as I'm looking around more at these, they were way underpriced. I think he was just he was probably an out of state investor or somebody just kind of seeing
Yeah,
what was out there. But
interesting.
yeah,
Um, hold on, let me see. Pull her loan up. Katarina, right? Is it
yeah, Katerina Palumbo.
Columbo?
Yeah, I'm sure I'm saying that wrong. The traveling nurse, traveling physician. I'm sorry, and that's just it. I thought she was a traveling nurse. There's a
Yeah,
difference
so
between a
there's some
traveling nurse,
caveats.
traveling physician when it comes to income.
There's
Evidently,
some, yeah, there's some caveats to her. Her offer letter is going to be very important because, and I'll have to coach her through how to get the proper offer letter because if it's
offer
straight,
letter.
yeah, for her new employment, right?
Okay,
Doesn't she have a new job starting?
yeah,
That new job is a 1099 job.
and
So if we can,
it had like an initial fee to it, didn't it?
yeah, but if we can, so if you're 1099, remember 2 years history is what we need. But if you can get an offer letter stating that you're guaranteed a certain salary and your start date is X amount and there's no end date to that, it's an open contract, we can use that income immediately. But if that
I see
offer
what you're
letter,
saying.
yeah, if that offer letter comes in and says you're only good for 1 year at this contract price, we wouldn't be able to use it. So that's the conversation that we need to have to go over that in detail.
Okay,
So that's going to be the key piece.
all right.
Yeah, but yeah, overall she's good. We just need
Okay,
to make sure that that's that piece of the puzzle. Otherwise, she doesn't qualify. She won't qualify for a year or two.
okay. And then when it comes to Jonathan Terry, the investing property, um, if he does not live in it, so what's the difference between him living in it and not living in it for 2 years?
Down payment, and the rate. So your rate's probably going to be about 0.5% higher in rate, plus maybe 1% higher in closing costs. And then you'd have to put minimum 25% down. Well, she
If
may,
he's not living there,
but yeah,
25 down if he does not live
25% down. Yeah. But good question.
there. And the down payment would be, it has to be 25%. And then what would you had 1% and 1% higher interest rate?
No, 1% higher in fees. So yeah, the mortgage rate's probably it'll be in the high sixes, and then there'll be an extra point associated with it for the loan level adjustments for that 4 unit. So the overall closing costs, let's just say they're, 8 or 9,000 for the purchase. It'd probably be closer to another 1% of the purchase price. So another 7, 8,000 more.
Okay.